Evening, everybody. It's 6:02 on Monday, the 13th of June, and what a day. Okay, so you've seen all of the information, probably. You've heard all the stories, but as far as I'm concerned, there really is only one story, and that's interest rates. Today we had the 2 and the 10 trading at the same price near the close. So uh, clearly, the yield curve has flattened dramatically. It flattened pretty dramatically last week. The numbers that I was looking at when I did the letter um, on Sunday were that the 30-year was 3.2, and that was up 9 basis points. The 10-year was 3.15, up 19 basis points, and the 5-year was 3.25, up 30 basis points. So that was a pretty steep decline also, but it continued on today. As you, I'm sure, know, the biggest loser today, not by much, but by a little on a percentage basis, was the Russell, primarily small cap. Let's remember that the issue here in higher interest rates is Apple or Tesla or anybody else in the large cap group has the option of issuing stock, issuing debt. The stocks that are on the Russell, even though they're public, tend to be smaller businesses, and it's the interest rate borrowing that hurts them the most. So the Russell was down 85.69 or 4.76, while the NASDAQ, also down hard, 530, was only 4.86. The S&P was down 151, which is 3.8%, 3% down in the transports, down 400, and the Dow, after being down just under 1,000, closed down 876 and change, 2.79%. This is another day where we had a pretty extreme um, imbalance in the advanced declines. At the close on the NYSE, 17 to 1. At the close on the Nasdaq, 7.3 to 1, and volume was higher today at 5.8 billion versus the numbers that we've been seeing pretty much all along in the basically 4 to 4.5 billion. So today was kind of a washout. Clearly, the biggest problem was Bitcoin and Celsius, but you have to look at you have to look at the lumber, and you have to look at the builders when you see that the 30-year jumped 28 basis points from under 6 to 6.13 for a 30-year, plus points. That equates to about 635, 640. So all that said, it was a very ugly day. There were a couple of highlights, though. I mentioned Dawn this morning, DAWN. This morning it was 13.98, up $7 and change, or 112%. This is a company that reported results from a juvenile brain tumor study. It managed to close 1509, up 847, or 128%. So there was that. An interesting commentary on Redbox, which I wrote up at around $3.50, with their deal with CSSE, Chicken Soup for the Soul. Strange name, but what the hell. In any event, um, the only news that was out today was that CSSE would benefit dramatically from the Redbox deal. Again, this deal has never made sense to me, but it makes less sense today, where CSSE closed 811, down 65 cents or 7.4%, while after trading at 18.20, Redbox closed 14.80, up $1.60 or 12%. So there you go. Again, makes no sense. On the earnings front, we had Oracle, which had closed at 64.05, down 309, reported a beat. The stock was as high as 106 this year, but it was a strong beat, and after closing 65.04, it traded as high as 72.33. Last is 72.10, and that was up $5.46 or 7.8%. So there were some gainers. I'm giving everyone fair warning. There is very obviously a counter trend rally coming. We only see these kind of setups a couple of times a year. But we see it today. We're outside the lower Bollinger Band on the S&P. I would either trade the S&P or the Qs. The Qs have been under more pressure lately. I don't know whether that's going to mean a bigger reaction back up or whether we just go with the S&P, which has been holding up better. Ideally, this is the S&P. Ideally, we would see it maybe down in this area, this 3650, another 100 points down. We closed 3750, 3750.50 today. You know, I've really been looking for this 3500, which is the 50% Fibonacci retracement, but I would settle for something else. The way that I see it setting up is if we're down tomorrow, the trade would be Wednesday. If we're up tomorrow, if we bounce, then I have a feeling that we're probably going to go down on the news. Everybody is now talking about a 3/4 of a point rise in rates. And depending upon what the Fed has to say, whether or not it becomes hawkish. This has been a really strong decline. And the measured move, as I pointed out, from Fibonacci 38.2 to 23.5 was 200 points. The move down to 35 would be perfect, but we generally don't get perfect. Okay, oil was actually up on the day 26 cents after being down $3. The gold got crushed down 43 and made a lower low than Friday's low before it rallied $50. Bitcoin, everybody knows, got pounded 23,110 down 58.10. The dollar was up 9.96. So almost a 1% move in the dollar. The bonds were down 3, and nat gas was down 24 cents after being down about double that. So get ready for a trade in the next day or so, and I'll be back in the morning.